It's Monday, April 7th. Let's level up. I'm going to be doing a live video on how I like to trade crashes on Tuesday at 2:30 p.m., so be sure to reserve the date. I'll be doing a Twitter space. I may do video. It may just be audio. I have to see what actually works. As far as markets go, we had the big down open that I had expected we would get on Monday. It's just sort of how it goes when you close on the lows on Friday after big down moves. VIX got a new high today. It hit 60. Today's low of day in the VIX was 38.56. So what you will need to see are a couple of things. One is either for the market to make new lows and the VIX not confirm, or just the VIX to make a lower high and then take out today's low, because we are technically still one time framing to the upside. I believe today's move was the big down part of a second wave in the market. Usually down tapes have 3 to 5 waves on the downside. I think we are only in wave 2. Does that mean wave 3 is imminent and for sure has to happen? No, the only thing that's certain in life are death and taxes. This also, by the way, happened at a very inopportune time for the market because you had likely sellers anyway in big cap tech to raise money to pay taxes, and you're right ahead of earnings for the buyback blackout. I wish the administration would have consulted Trader or somebody like myself on this, because I would have advised them to wait or do it earlier, but it is what it is. So have an alert below 38.57. If we can get below there, I think there could be a pullback to 34s and maybe even the top side of the old up channel in 31.83s. Remember, 31 should have been resistance. It now may act as support, at least initially. When you have a big volatility spike, it just doesn't completely crash. Usually it'll chop around a little bit within a higher range before it does ultimately pull back. We will have some resolution on the tariffs and of course on earnings, but I think the big problem for earnings that are coming up are the guidance is going to be weird because companies don't know the effects of the tariffs just yet. They may have decent quarters, but everyone may be worried about forward guidance, so that could be an issue. But depending on where price is in the market, that may not necessarily matter if things are already down huge. If we have rallied back, that's a bit of a different story. As far as the ES and the NQ perfectly hit my 2.618 downside projection at 16,452.5. We rallied back up, so just keep it super simple. Bulls will need to hold it over the 2 times range at 17,416.75, maybe an overshoot to 17,244, which is today's VWAP. We did have a little bit of a rich close. A check back to the breakdown could, depending on how you measure it, take you anywhere to 18,819 to 18,976.75. The apples to apples in the ES there would be 54.81 to 55.33.75. 5,500-ish area was a lot of support. It now is likely going to be resistance. We had that initial spike today on some news that the administration may do a 90-day rollback of the tariffs. That doesn't seem like it's going to be the case, although we did get some pretty good news that they are going to be opening talks with Japan. It seems like India is going to have some deals in Vietnam. I would imagine the low-hanging fruit here are going to be the European Union and Mexico and Canada. Canada may be talking tough, but their whole economy will collapse if U.S. tariffs remain in effect. Today's resistance was the 100 MA 30-minute. Remember, it had been the 20 MA 30-minute. I think we may get a test up to the 200 MA 30-minute, but that might be an initial back off for a scalp trade. But generally, bulls will need to start holding the 100 MA 30-minute and clearing the 200 MA 30-minute to get into set resistance levels. As far as SPY goes, we had a neckline at 549.68. We broke that. We're targeting the 2 times range on the downside. We actually got that and overshot today. The 2 times range actually lined up with the 61.8 from the Halloween low, so that 486.13 to 487.15 area was tested, and we actually tested the 50% fib at 480.67, which is where I told you I thought we were ultimately going to go to on this leg. And that would go back from all the way on the rally that started at the end in Halloween-ish time of 2022. What now? My thinking here is that if we do have a sustained bounce, we might get back up to the 549-ish area, and then we'd see there's also some resistance at 539s. But if we do wind up having another leg lower, the 61.8 and the 2.618 of our collapse range could take us down to as low as 446.86 to 449.39. That would be the 61.8 from the Halloween low from back in 2022 and the 2.618 of our collapse range that we're using from the all-time high at 219 down to our reference low from 314. So that to me could be the third wave down. In the interim, I suspect we will have some chop and consolidation and maybe even some more bounces. I would use these opportunities to sell some upside calls against longer dated positions to benefit from the higher IV here. And with a VIX this high, if you want to own the market lower, sell some out of the money puts or out of the money put spreads. Pick some favorite names you're into, look where they are, if they're into 50 or 61.8% fib retracements, and you could sell still further. And because the VIX is so high, you can get stuff further out that you might normally get. For example, if you look at May expiration in the SPY, the expected move here is $55. If you want to go out and sell 385 puts, which would be the really worst case scenario here, you could get $3 for them. The reason I'm thinking we could see that move for the third wave, because that's really the retest of the entire breakout. And maybe there is some overshoot, between 460 and 440. It doesn't always stop on a dime when things are moving in a frenetic way, either up or down. But for the time being, I think we're in consolidation and bounce mode. As far as the Qs go, very similar setup there. I think that the Q's problem is it's the furthest one away from primary trend, and that also lines up with the 2.618. We didn't quite get the big 2 times range, which would have been 392.05, and by the way, the 2.618 would be 346.08, so that to me would be end range if we did keep going, 346.08. On the upside, the 466 area was the big breakdown point, so that could be where we may rally to. I would also go as far as taking a fib retracement and going from the all-time high, and let's say we use today's low. I don't know that this is definitely going to be the given low, but the 38.2, which would be a weak bounce, would be 454.96, and the 50% fib is 471, so that 466 to 471 area I think would likely be some resistance. We're going to need to see a few types of stocks bottom. We did see some support in Amazon and Google, like I had told you I thought we would see, and even in Apple, but Apple didn't really get a lot of the bounce. It did get the 5-2 gap fill at 173.03. It had a pretty solid bounce, and I had talked about playing that, but it didn't hold a lot of the gains. Now, if it does keep going, the next big support on the downside is 153.50, which is the 2.618, and then you have the anchor VWAP roughly around 150. So if you want to buy some Apple, maybe use the high volatility here to sell some out of the money puts at 150 or below. I would even go, if you want to go longer dated, and maybe even look at the 130s. Generally, the Apple tends to rally into iPhone events, which are in September. In this type of a wild market, it's a long way till September, but if you wanted to do a 1x2 put spread, maybe buy 150 and sell 130, 1x2 out in that time range. And if it does keep coming down, you could sell the premium that you're long and leave on the premium that you're short. I had warned people about NVIDIA likely getting back down to the hundreds and probably even down to 90. Primary trend in the 61.8 here are roughly around 82.65, and then there's another longer dated 50% fib at 81.85. If you want to sell some out of the money put premium, I'm good with going a little longer dated and selling something between 67 and 75 depending on your time frame. But if you do want to go out to May, you could sell maybe the 75s for $2 and change. If that does get juiced, maybe take 3 if you can get that. I do think that NVIDIA will find some support. There's likely going to be a bit of a bounce leg. My guess is it would check back to the 104s and maybe the 113s, but that's probably where you got to bail out of the trade. Or just wait for an IV contraction and then use that opportunity to book that out of the money premium. As far as Amazon goes, that hit the 50% fib at 161.98. If it did keep going, the next level would be 151.60. So if you want to sell some out of the money puttage there, that makes sense to me. I do think the 188.65, which was the old 7/13/21 reference high, is likely going to be some resistance now. The Google filled the 315 gap to 141.18 and bounced. It didn't really bounce that hard, but I would imagine the 20 MA at 160.34 is the next big upside resistance if we do continue on the rally. Tesla did finish down. They're obviously having some problems with China, but it isn't really making new lows. Anchor VWAP is currently 207.48 and rising. That 2.618 is just below us at 186. If you want to be long Tesla, maybe sell some 138 or sub puts. That would be a full retracement from the 422 lows. So I don't necessarily hate that trade, and you can get the premium on for a decent amount. Bond trade did wind up pulling back here. We did see a pretty sizable collapse down to where we might even want to start looking to reload in the 89s. We had talked about selling up past the 93s up to the 95s. We topped out in the 94s. Today was a pretty large pullback in TLT. I think it was just some profit taking. I don't necessarily know that that trade is over, but short term it did get a little bit overheated. Friday, we did see some strength in Bitcoin. Today, we actually did see a move lower. We got the 74,415, which was the 314 reference high. We actually are still trading above the 200 MA here. So I'll tell you what, if you want to be long, use 78,593 as a stop. I like that as a trade. Generally speaking, the market is now, I believe, into the second leg of a decline with a possible third wave coming. I do think we're in a bit of a stability period here with bounces, and I do like the idea of starting to nibble here, and with the volatility as high as it is, starting to sell some out of the money premium. If you're long shares, you could sell some upside calls and benefit from a rebound in the share price and or an IV contraction if the shares do rally. If you want to start legging into some positions, go to said strikes that we have talked about and maybe sell some out of the money put premium. If you want to cap off your risk, you could sell a higher strike put and buy one still lower. So for example, just theoretically speaking, you sell 100 put, you buy a 90 put. You could benefit from the short premium, but you cap off your risk on the downside. Remember, tomorrow at 2:30, we're going to be talking about how I like to trade crashes. You had a little bit of a preview of that here. Like and follow for more.